Petrofac, a prominent North Sea oilfield services group, is facing a critical juncture as administrators are poised to step in this weekend. The potential insolvency of the company could jeopardize over 2,000 jobs in Scotland, sparking concern among industry stakeholders and government officials alike. Sky News has revealed that the directors have enlisted Teneo for an administration process, which could be finalized as early as Monday morning. The company's board, led by former Anglo-American finance director Rane Medori, is engaged in emergency discussions this weekend to address the looming crisis. An industry executive anticipates a decision to file for administration before the stock market opens on Monday, with the fate of the company hanging in the balance. The Energy Secretary, Ed Miliband, and other ministers have been briefed on the situation, highlighting the potential impact on Scottish jobs. The Department for Energy Security and Net Zero has engaged Kroll, an advisory firm, to collaborate with ministers and officials in managing the unfolding crisis. Interestingly, government sources claim that Petrofac's UK operations are experiencing growth, adding a layer of complexity to the situation. However, a source close to Petrofac has contradicted this, stating that the UK arm has not faced any loss-making contracts and is well positioned to secure its future. The administration process, it is noted, will primarily affect the parent company, Petrofac Limited, rather than the company's workforce. The potential collapse of Petrofac is particularly sensitive for Mr. Miliband, who is under pressure to permit more North Sea oil and gas drilling, despite Labour's manifesto commitment not to grant new field licenses. Petrofac employs approximately 7,300 people globally, with a significant presence in Scotland. The company specializes in designing, constructing, and operating offshore equipment for energy companies. The suspension of its shares since April has further exacerbated its financial troubles. Once valued at over £6 billion, Petrofac has been grappling with a substantial debt burden, leading to a serious fraud office investigation and a 2021 conviction for failing to prevent bribery, resulting in a substantial penalty payment. In a recent stock exchange announcement, Petrofac revealed that the cancellation of a contract by TEN-T, a major European electricity grid operator, had rendered a solvent restructuring unfeasible. The company's board, after assessing the impact, determined that the restructuring plan, which had reached an advanced stage, could not be implemented in its current form. Petrofac remains committed to serving its clients and maintaining operational capabilities, while actively exploring alternative options with key creditors and stakeholders. The company's financial restructuring efforts have been ongoing for over a year, with a formal plan sanctioned by the High Court in May 2025. However, this plan was subsequently overturned, leading to revised talks with creditors. If Petrofac does fall into administration, industry experts predict a potential breakup, with key assets and contracts being acquired by other players in the sector. The situation remains fluid, and further developments are expected in the coming days.